Live streaming is on.
Hey, good morning and good evening, everyone, from wherever you come to or from anywhere around the world. I'm Dan Gay, the Chief Marketing Officer of BCERT Blockchain, and I'm super excited to talk about what we're going to talk about today, which I don't want to spoiler alert, but Tim and I came to some of the same conclusions on one thing, and we want to demystify DeFi. And
Exactly.
It's something that is the underlying layer of a huge movement that we've been seeing that's been happening. And I know Tim's thought about this, I know probably 5 years ago or so. I know we talked about it 3 years ago. So it's been in the making and now it's actually coming to fruition. But what does that really mean? What is Uniswap, farming, peer-to-peer lending, and all of those things? And we're going to talk about that and kind of demystify all of that today. And then part two, we'll talk about the next layer next week, which is also equally exciting. So it's the evolution of finance and kind of a look into the future. So this morning I'm joined with Mr. Tim Vasko, who's the Chief Executive Officer and founder of BCERT Blockchain. Good morning to you, Tim.
Hi, Dan. How are you today?
Awesome. And as always, we always look forward to this. I can barely sleep the night before because I get just
Friday morning. Friday morning live.
I know, love it. And we've got Daniele coming to us from Rome, Italy. And good evening to you, Daniele.
Hey, Dan, how you doing?
Great, good to see you again. And Daniele's
you're talking about demystifying and mystify. By the way, it's one of my favorite songs from the
well,
I'm using mystify instead of demystify, but it's kind of the same root.
Yeah, we're in the zone then this morning or this evening.
Yeah,
so
exactly.
Good. So I want to take care of some housekeeping issues, and I was just dying laughing last week during our webinar in that, Tim, you had asked individuals to click thumbs up, and in the text stream, somebody in the chat stream, somebody said, hey, give us a thumbs up, and all of a sudden there were a bunch of thumbs up in the chat stream. So hello, boomer.
Yeah, exactly.
When we say that, help us out and click on the thumbs up button just below here. That would be great. We love it if you put it in the chat stream as well. So thank you for doing that as well.
Comments there are great.
Yeah.
Google only counts it if you click the little button, though.
Exactly. So, and then, please subscribe if you haven't done so to our channel. And our channel continues to grow, and we've kind of held it as a private thing in the past, but we're ready to really open this thing wide open. So with that, Tim, I know you've got an exciting deck that you're going to take us through, and we've got lots of questions. And Danielle, I know you're going to chime into this as well. So let's start this off and demystify DeFi.
Yeah, well, hopefully today we'll also avoid some of the issues we've had, technical issues we've had streaming to YouTube with some of the reconfiguration we did for sharing the decks and sharing the information. So let's give that a shot and see how we go today. But yeah, demystify DeFi. Let's talk about it. It's a fascinating time right now. It's super exciting. As Dan said, I've been thinking about this and talking about this for over a decade, actually, and going back to my history when I was teaching at the university, I would teach global finance and things like that. And we're going to go a little bit to do a quick run through of what DeFi and finance are. So I hope this is interesting. Speaking of OK Boomer, it's kind of good because a big part of what's happening today is and why we can talk about this and make this relationship so people can start demystifying this is it's very much what has happened in our financial systems for centuries, really. And today it's where technology meets money. Not that it hasn't before. It's just very, very available now. It's very transparent, as Daniele will talk about as we go through. So first of all, we knew about this. We've talked about this in the past, but technology opens the door to speed, transparency, and tracking. It distributes the capability. That's probably the biggest change right now is we're distributing capability from a few to a many. So, this is called inclusion. And when blockchain first came out, that was a big part of the initial idea. And we even heard Wheelie Pay on one of our discussions talk about inclusion. So inclusion's always been very big. It's happening now at scale, or starting to happen at scale in trading and DeFi and things like that. And finally, what's really the big change, and we saw this with GameStop and our ultimate discussion on that, what happened there, is we saw this general public having influence over the market. So it's been a big transformation of what already was going on, really. So what I'd like to get everybody to do is stop for a minute and think about it as a game of chess, because it's really actually a game of chess. And when we start thinking about chess, and we think, if you love to play chess, I love to play chess, you think about the DeFi digital markets evolving today, what you're really looking at is this idea of DeFi versus traditional finance. So in chess, there are about 218 moves per square on a chessboard. And so the crude upper bound for a chess game is 218 to the 11,797, or 10 to the 27,586 power. That's a lot of moves. All right. So when we think about DeFi and we think about all the moves and things that could happen with technology, that's what you're trying to do. And it's not just DeFi either. It's all those moves on the chessboard that involve finance, that involve business, that involve all these things that are being thought through and dealt with in this. So let's look at what that state of play is today then. The state of that play is that today complex financial models are now being coded into these technical models. And we've heard Daniele talk about it. We heard Christoph talk about it. And you're seeing it emerge every single day now in these crazy models that are out there. So where we're at right now in the world, in history, is tech gurus rely on complexity, and so do financial gurus. The more complex and the quicker they can figure that out, like these complex chess moves, the more likely they are to win the game. Now, importantly, currently in blockchain and tokens, most, if not all, of the volume is based on movements of trading volume. Right, Daniele?
Yes, because the first proven use case in blockchain, it's money. It's programmable money.
Exactly.
It's proven to work following 12 years approximately of experience. So I think there's no doubt about it.
Yeah, so it's very clear, but it's not actual business transactions yet. And we've talked a lot about what we're doing at BCERT with actual business transactions. We're going to get to that, but I want to really focus on what's happening today and how this works. So people who do want to get involved know where they stake their play, how you make your opening move to get into this business. That's it's very much, or into this model. It's very much like that. Complex financial models are now mathematically programmed, so they're accessible. They're accessible, and it's not exactly easy to access them yet. You can ask Daniele, because I think he's been doing some swaps and trading and staking and things like that.
And I'm still doing.
Yeah, and so he's got more experience at kind of looking at this. And frankly, it's not just brain dead easy. There's still a lot of stuff happening, and behind the scenes, there's even more. But what we see is this other emergence that is driven by what I call influenceonomics. And influenceonomics are things like Logan Paul selling Pokemon cards with NFTs, and Elon Musk coming out and saying something about Dogecoin or something like that, and markets just move. That's influenceonomics. That's the herd mentality. It's the network effect. It's herd mentality. We also saw influenceonomics with GameStop, because in that case, it wasn't a celebrity, but it was, or a person that had this influencer status. It was more the crowd influencing that and moving it through Reddit. So all of those kinds of things are influenceonomics. So we have to take that into consideration. It's certainly fundamental. And again, we've seen that over and over and over again. It's playing out.
And Tim, I also want to just state one kind of obvious thing that I was thinking about the other day is, in the past, the stock market, we think of the stock market and those financial instruments, et cetera, but those still represent a very small percentage of people that are actually involved and invested. Whereas what we're talking about now is actually opening up an entire new world of individuals that are getting involved in this.
Well, yeah,
all through social media and other means.
Exactly, because of influenceonomics. It's awareness.
Yep. Yeah.
And the other thing we talked about earlier, which was inclusion. So influenceonomics and inclusion. So the easier that these models become to get involved, and the more awareness there is, the more impact that's going to have on these markets, on all markets. Which brings me to point number 6, which is fundamentals of blockchain don't really yet exist in the market for the yields and the movements with the blockchain markets and tokens. Yet that's where we're headed. That's what we're about at blockchain, at BCERT in our blockchain, is providing those tools. But is it really there at scale yet? The answer is no. This is all still very much about trading and about the idea of making money from those volumes and those transitions. And this is where you don't want to be. This is what you don't want to look like, right? But today, most education really is about how to profit and the positions, rather than how to build business models that justify and create these DeFi business models. Most of it's all about the how, what it is, and things like that. And so what we want to do today is give you a lay of the land about what that actually means in the market of trading money versus businesses making money, and how that really creates this ecosystem of a new digital business cloud. That's really where we're headed. Right, Daniele?
Yeah. So, and I just want to also stress a point about the influenceonomics that you mentioned before, because we are in a transition phase from the internet. So the internet, which is essentially the internet of information, while, for example, social media have been built upon, to the internet of money that did not exist before. And even more, we have an acceleration factor here, because right now, you know, if I take Bitcoin, there are only 100 to 100 million people that owns a Bitcoin over a fraction of Bitcoin. But they expect it to grow from 100 million, yes, to 1 billion in 4 years from now. So this means in the next 4 years, there will be from 100,000 to 1 billion people owning Bitcoin. So they will be included in the system. I'm talking about into kind of digital asset system. And they started to understand how to deal with it. You know, either trading, making money, providing liquidity, and doing other stuff. But what is probably underestimated is that, number one, anything that happens around in this world happens at a velocity, at the speed of the light. So while we're talking about, for example, DeFi, every single week, there is a new decentralized exchange coming in. There is a new protocol. There are different reward opportunities. There are different liquidity methods to play with. You cannot be, up to date with everything. So I think one of the first steps, and this is the education that we're providing in using tools like this, again, not financial advice, is to, first of all, to define what is the first step to enter into this big marketplace. You know, you want to trade, you want to be a kind of a passive investor, you want to observe for a period of time, because as soon as you start going into YouTube and then you look at a video that it's kind of related to trading, you will be bombarded by videos, advertisements, messages in whatever social media.
The next hottest token, the secret, the guy who bought Amazon at 2 cents.
Correct.
Is going to tell you how to make money.
The big gold rush.
And in crypto, you will see, you know, tons of influencers pushing the so-called gems on altcoins that provide you 100x. So that is not, you know, an easy game, number one. And number two, there's a lot of do YOR, so the own research, and there's a lot of education. And our goal here is, number one, explaining what's going on today and what is going to happen in the future. That's why we keep on shooting every week, because this is a landscape, as an environment which is changing so quickly.
Well, and there's also an element here that could be .com-ish because of the hype. Not could be, will be, but out of the ashes of that, a real transactions, real yields and movements and all the complexities that you were talking about. It almost makes me think hello boomer in terms of Bitcoin, because, you know, it was an early entrant into this, and there are just so many different things that can be done with DeFi now, and will be into the future.
Exactly. So let's dive in and talk a little bit about some of these fundamentals, because as you point out, Daniele, our goal is to start making sense out of all of this and ensure that when the information comes out, regardless of where you find yourself, if you're listening to this, you're finding this through a search or what have you, what we want to do is give you some foundations and some functional things about what's gone on that has created this. So let's start with liquidity pools. You get out there and you talk about liquidity pools. Well, first of all, liquidity pools have been around forever. Now, did you know about them? Probably not. That's why they're called dark pools. Okay. So DeFi is transparent versus dark pools, which equal shh. Okay. What a dark pool is a institutional trading volume that has various parameters set on private exchanges. This is completely in traditional finance. This has always been there. This has been there for a long time. And they're almost all this information is unavailable to the public. This allows institutions to move big chunks of stock or bonds or what have you without the public knowing about it on private exchanges. Now, that was kind of this idea behind GameStop, right? Behind selling short at GameStop. It's like, okay, let's get this out there, sell it short. The stock's going to go down. We'll pick up through our dark pool the profit, and the public's left holding the bag. That was long and short of it. That was the deal, right?
Just like the movie, Tim, Trading Places with Dan Aykroyd.
Yeah. Or even better, The Big Short, right?
That is the analog version of what happens today, you know.
Right.
Trading Places, very, very analog.
So as Daniele pointed out, this happens fast. It happens incredibly fast in milliseconds. What happened after dark pools came out and that started happening, and just read the title of this book. It's Dark Pools, The Rise of the Machine Traders and Rigging of the U.S. Stock Market. Right there. Guess when this book was written? Take a guess. 2013.
20 years ago.
2013. So it was written about the time Bitcoin and everything was starting to come out, right? After the big crash of 2008, we go through the kind of recovery period, and we get this book out about what happened coming out of that. So a lot of things started happening about a decade ago when 13 years ago now, when the market crashed and the Great Recession hit, because again of financial markets and financial trading and failures and things like that. So dark pools and high frequency trading don't happen without technology. That has always been there. That's been there for a long time, and billions of dollars have been made like that. So when we start looking at liquidity pools, the idea of liquidity pools, or the reason those dark pools have always been important, is because liquidity pools in DeFi create this transparent liquidity, and now you can see the ups and downs of all the liquidity related to that pair. Right, Daniele?
Yeah, this is a brand new concept. So because in traditional markets,
well, transparency is a brand new concept.
Yeah, but especially how this has been implemented by the first decentralized exchange, which is Uniswap, that pioneered a way to matchmake a supply and demand in a trading facility. So it's extremely transparent, so you can see, first of all, how much liquidity you have for a certain pair, number one. And number two, you can also see the fees. So how much money is being generated, because at the end of the day, trading fees is the revenue opportunity for whatever exchange, beside other stuff. You can clearly see how much is being traded into that couple of assets, into that trading pair. This was not available before DeFi, because if you go on a top exchange, say Binance, Kraken, Coinbase, you see the volumes, you see how much volume is being generated in trading volumes, but how much fees is being generated out of this billion of trading volumes in BTC, USDT. You don't know how much money Binance is doing or Coinbase is doing.
You actually didn't even have all of the information in traditional finance or centralized exchanges, and you don't, that would give you the information on what's sitting in a dark pool, for example.
Absolutely.
So this is brand new. So as transparency arises, we're starting to see that the financial market become a lot less mystical. It's demystified. Walter Bagot in I can't remember 1800s or 1500s, somewhere in there, 1600, wrote, "We shall not let magic daylight in upon the magic," about finance. In other words, it's this magical thing. Don't let anybody know about it. Right? This has been going on literally for centuries, and it's the fundamental essence of our banking system. Our banking system requires, in the United States and most places, a 5% ratio of leverage to assets in the bank, savings, your or my savings and dollars in the bank, which makes banks the highest leveraged businesses in the world.
Yeah, and the beauty of it, Tim, is then the government, like in the U.S., the FDIC guarantees that for banks. What a beautiful business model!
It's a great business model. So until it doesn't work, right?
Exactly. Until there's a run.
And we've felt that. But the way that it works is we take a 5% reserve ratio minimum. Most companies, most banks right now in the U.S. during COVID, about mid-year, were somewhere between 6% to 7%. I think JP Morgan's about 6.8. And so they're slightly over that, but that means 95% they're able to create liquidity. And this idea of liquidity is really important. They're able to create liquidity into the market at 95%. So the theory in 2008, when the first bailout happened, and we just saw another one approved, a $1.9 trillion stimulus package in the US. But the first time that all of that money in 2008 went to the banks. And what the banks were supposed to do is take that stimulus package and that money and lend it out. What they did first is they shored up their balance sheet and figured out ways to make more money and more profits. A big contention of mine for the longest time is how banks have been able to utilize their systems, their technology systems, not only to do this leverage and manage it, but also to charge us fees. So the fee market for an overdrawn account or something like that, even if you set the limits, try it sometime. Try and go say, oh, I don't want my account to go overdrawn. That's very unprofitable for a bank to give you tools that allow you to properly manage, because it's about a $7 billion a year revenue stream. So all of this kind of fee market, rewards, things like that you're hearing out here in the marketplace have been there forever, whether it's trading, it's penalties and fees and what have you. And that's chipping away at the visibility or the transparency of how these markets have always worked. And now we've got technology broadly distributed to be able to make this possible to more people, more visible, more tools, and more access. And now we've got media attention on it. So that's really, when we start demystifying DeFi, don't think of it as something that's absolutely brand new. What it is brand new about it is this idea of transparency. Would you agree with that, Daniele?
Yeah, and that's I do see this from two different perspectives. One, from a, let me call it from an enabler point of view, and the other one is like is like a fire on the fuel, which is the enabler is that we are living in a macro context. While you mentioned before the stimulus package, the 1.9 trillion US dollars that will be kind of printed and pushed back to into the kind of people pocket by raising the debt, and likely inflation will rise up. So there are kind of a macro concern from the outside in, and at the same time, so COVID, the whole technology platform stepping up to a higher level. Having this year, we're going to experience the first IPO in crypto, which is Coinbase. They will likely do IPO at 100 billion valuation. It's just unbelievable. And other companies like BlockFi, just today they raised 350 million as part of a Series D rounding at the valuation of 3 billion. This is not DeFi, but we have a macro scenario. We have new technology player playing in the field of the digital asset space. Plus, we have a DeFi, which is kind of an evolved protocol that sits on top of these huge capital inflow. So then if you see this from a macro perspective, this year, we're going to experience a huge acceleration in the space, and having much more market participants bringing an enormous amount of liquidity in the space of DeFi. And this is good for the industry, because at the end of the day, more people will use it, more robustness will be bring, more people will take eventually profits, and will educate on what's going on there. Who is somehow negatively exposed to these are, the traditional financial players that works in analog mode.
So, this all sounds really like great. And that's one of the problems with the space right now. One of the problems with the space right now is it all sounds great. It's like, yeah, I want to get in. And, what we all want to do is kind of this. We want to, I did nothing today and still got paid. That's like the dream. Let's go, Dilbert. I mean, let's have that happen. Except if it was that easy, and if it was that clean, and it was that simple, we wouldn't have all these complexities, and we wouldn't have all these systems. So there's a lot of things that are going to happen, and we're going to talk about farming. Farming is like dividends. It's like trying to get, take assets and dollars and just get paid for effectively just having money sit there, liquidity sit there and do nothing, right?
Yeah, but I was talking to a friend of mine today, and he's a clinician, so he's not an expert in finance, in managing money. And then he was asking me a question on how to invest. And I didn't provide any type of investment solicitment whatsoever. But I was asking a very simple question. If you have whatever number of cash in your bank account and you get whatever interest, 1%, 0.5, whatever number, do you know exactly how much you are just losing to keep your cash in the bank account? Do you know how much is this number? Is 2%, is 3%, is 10%, is 8%? Do you know how to calculate it? And he said to me, wow, it's likely 2% a year because some formula he's seen around. So this means my 100,000 will be 2% less in 1 year from now. But then I said to him, you have an opportunity cost because this 100,000 can be used into something and give you a higher yield that somehow you have to be accountable of. So what are the opportunities that you are aware of it? And then he was mentioning, you know, the traditional opportunities he was mentioning to me. Obviously, he didn't mention to me DeFi. He didn't mention to me other stuff. So the point is that today, the fact that we have money, we have liquidity that we bring into the banking system, make the banking system profitable, let me say in brackets, to use this liquidity and do what they do very well. You know, to use this liquidity and then to take a profit on top of it. They take a profit and they give you a very small yield in return. But at the end of the day, if I take the pie, probably 99% of the pie is going outside and 1% of the pie is going back into the pockets of those that bring liquidity.
Actually bring the liquidity. That's correct.
In DeFi, if you bring 100 and the pie is 100, then you get anything out of 100. There's no one.
That's right. You get your pro rata share.
Correct.
So that's a big difference. And this idea of generating an income off of this, although it's incredibly speculative right now, and we're going to talk a little bit about why this is so speculative, because you can't tell, because it is mirrored in those 7 things we talked about. Influenceonomics. You can't tell what's real. There's no real fundamentals behind this yet. It's trading and it's volume. It's the exchanges telling you, do your Sushiswap or your Pancake swap or your whatever. I mean, I don't know, burger swap. I'm sure burger swap's coming. And there's no burgers being made.
I don't think so. There is Pancake, there is Sushi, there is Goose.
There's no burger swap. Come on, guys. Where's the burger swap? We all love burgers. So let's get into...
As Daniele said, velocity too.
Yeah.
The money over and over again. Yeah.
So we'll talk about that. So farming is the return. Staking is the leverage. Staking is the actual leverage of this. And when we look at banks, we talked about that 5% SLR or supplementary leverage ratio. So a proof of stake is like very much like what the banking system does. It takes the coin amount, it pays that percentage reward, just like what Daniele was talking about, whatever percentage is set by the bank, or in this case, by the pools, by the staking pools, and they deliver rewards for stakes on deposit. So the likelihood of how much you get, and we all know this, is based on the amount of coins you have. So let's take that back to the real world. If you put $100 in a bank, how much attention do you get? None. If you put $100 million into a bank, can you negotiate?
Yeah,
do you get a little bit?
1%er club, Tim.
You get the 1%er club and private client services and the inside track and the inside deals. So staking, again, has always been a part of the financial system. It works really well, but it actually depends on the amount of liquidity. And when the amount of liquidity starts shrinking, then things like that picture happen. And I want you to pay attention to where that sign was sold, because we're going to talk a little bit about that later on too. But when Lehman and Bear Stearns and these guys crashed, it was because the liquidity dried up for those pools. Think about it that way. There was no liquidity. So boom, it was gone. From a personal note, my family, my parents had investments like Lehman was considered blue chip. And they were in their retirement years and didn't want to lose money. So they put their money there to get the dividend, to get the income, except all the bondholders lost, right? They were retired. They were getting their dividends. They were farming. They were not working. And that went under along with some of our family net worth. Boom, gone. Nothing happened, right? That's the risk in the business.
There is a terminology to say this. I mean, that's mostly an exploitation of a smart contract vulnerability, but it's called rug pulled. And once liquidity in whatever liquidity pool disappear, all in a sudden, because, for example, a scam by the engineers that have created that smart contract. So you put liquidity, you bring money, you bring via tokens, and then all in a sudden, this liquidity, appears. So because of a technical bug, that's why, and then I make a kind of a link to the DeFi word. It's very important when you say fundamentals are extremely important for whoever bringing liquidity to whatever pool, into whatever trading pair, in whatever trading venues. It's essential. Number one, to run a kind of due diligence surrounding the venues of the platform itself, but also even more on the smart contracts that somehow supervise that liquidity pool. This is very techy. So very few people today in the space understand how to audit, how to run due diligence surrounding the smart contract. So that's very, a tech activity.
Well, and it goes back to what we said before, which is technical complexity, financial complexity. This stuff is complex. There are rules, code bases, things like that, all happening here that the average investor person trying to get involved in this market won't understand. They don't have the technical competency or even maybe the background or education to understand what's actually at stake here. No pun intended, but what's actually going on, right? And so this does that. If there's one word of caution, don't think this is easy, and please don't think that this is like, oh, well, there's this idea that we've heard about impermanent loss in DeFi. Well, that's a nice way of saying your portfolio just went down. Let's hope it goes back up, because it's not impermanent if it's permanent, like this one. It's just not. So these are all terms being thrown out there pretty loosely all over the net, as you were saying, Daniele. It's pretty loose, buzzwords and things like that out there. There's a lot of hype. And reality is that there are going to be fundamental business models that come out of this, and financial models and shifts. There are going to be. There is a proven, and it's getting more proven every day, this tokenomic model and trustonomic model, trusting in the contracts and things like that. But this is an evolution, and it's still early days.
But still, it is. I mean, we are the very, very early days. So which is good at the end of the day, because people can step into it and try, first of all, to see what's going on, to find the timing, a strategy to eventually step into it, which is, to me, it's a good one. And even more, it is true it's very early, but to me, when we're talking about money in finance, business model makes sense if there's liquidity, right?
It does. And
it does.
It does make sense. And so this is really the evolution, is providing some transparency, providing liquidity, and providing the scale at which this can be done. I want to point out one other thing before we leave this particular subject, which is, as Dan pointed out, there are in banks insurances against losses. That's why we use banks. And believe me, I don't think that should go away. That's really, really important. So when we started out this discussion today, we started talking about where are you going to find yourself in this new economy, right? Are you going to find yourself trying to get involved in the DeFi market? Are you going to try and find yourself trying to get involved in building a business around these DeFi principles, maybe a small entrepreneurial business, or shifting some of your current business into a digital business cloud model, a decentralized business model? Or are you going to try and follow the day trading and like the influenceonomics of this thing, which is absolutely crazy? We'll talk a little bit about that. It's like insane, unpredictable. But the whole idea is there are all these segments happening, like that chess move. There's so many variables that can come in, that when you're doing this, just be aware all of those things play together. And the more you can get those variables and make logical moves, the more likely you are to succeed at whatever area you're approaching the market with.
And just to end this point with this visual here, Tim, I'm thinking back to Lloyd's of London that left me with not a whole lot in a 401k. That the same thing that happened with your parents with Lehman Brothers,
Yeah.
and that when you think there's something that's safe, like with Lloyd's of London that provided a 7% dividend for almost 100 years, and then it goes from $90 to $2.
Right.
There's no safety in anything, but understanding what's happening in liquidity pools and understanding the smart contract, which is the cause and effect of what happens if something is triggered, et cetera. Those are the important things to just
and we're
note.
going to talk about some of that, because basically those brands also had influenceonomics behind them, right?
They totally did.
Why these were influencer brands. It was like, hey, we're Boot Strip. We're going to be here forever. And the TBTF, too big to fail, didn't exactly work here, right?
No.
So a lot of people forget about the things that didn't work. Euro Disney, which I had a significant investment in, went bankrupt.
Right.
Done. I thought it was a great idea. Apparently, the Italians and the French didn't think so much. It wasn't a great
They didn't
idea.
like Mickey.
They're not serving wine. Are you kidding me? I'm not going there. Okay, back to where we're at. So again, complexity in finance has always been there. Complexity in technology is certainly there, and return on investment is the big thing. So we're going to talk now about APY, the annual percentage yield, the interest rate that is actually achieved when the actual rate of return is earned across a year. Annual percentage yield. Now, when compounding, so if I've got $10,000 at 10% and I earn that in a year, then I've got $11,000 at the end of the year. That's pretty interesting. When I take the $11,000 and I now earn 10% on the $11,000 for another year, I earn $1,100 in interest. So I earn $100 more, or 10% of the 10%. That's compounding. So pretty straightforward. What's happening now is you get a bigger base to work with. These pools are coming out that show how a total supply of money goes through a supply of API return between the borrowing and the cost to borrow. So 9.5% versus a supply at 6.82 gives us the spread in that interest rate. And so now we have the same DeFi effect. We've been talking about equities, if that was lost on people, and the balances in equity pools, basically liquidity pools. The same kind of transformation happens in debts. It happens in bonds and things like that. And the debt industry is absolutely massive. In fact, it was the debt industry, not the equity industry, that crashed in 2008. In 1929, the Great Recession, what we had was a crash for over leveraging on equities primarily. But there were massive bond defaults, and there wasn't another massive bond default like that until 2001, which unfortunately I got the brunt of, and that was Fanova Capital Corporation, who was a fraud on Wall Street, and they ended up taking down billions and billions of dollars. Warren Buffett came in and tried to bail them out and get some money out of that bankruptcy. So, this idea of margin and APY is another interesting evolution. And when we start seeing I think what the point is when we start seeing these start expanding out of this universe of just trading and economic volumes and go into business models, is when we're really going to start seeing fundamentals behind this tokenomic world. So, Daniele, when we're looking at compound.finance, for example, which is the first one to come out and start lending, what's the perspective that you see on happening there when people get involved in that?
Well, first of all, what I think it's important for people to understand what are the interest rates provided by the common lending platform. Right now, if we take the total value locked into DeFi protocol, mostly on Ethereum, the main three platforms, which are Maker, which are Compound, and Aave, which are essentially lending protocols, they combine together approximately 20 billion in liquidity. Total value locked is one of the parameters, which is TVL, which is very common in DeFi. So if you go on Compound, for example, then it's exactly what you explained. So you you provide liquidity to, you lend essentially, let's say crypto, say for example, stablecoin like MakerDAI or USDT or USDC, whatever. So then you supply capital and you get an interest rate. So usually what happens in platforms like Compound, when they push a new asset, whatever the asset is, the interest rate is high. It's very high. Sometimes it can be 20%, 15%, the APY, sorry. But then after 1 day, 2 days, 3 days, 1 week or a month, it goes down. So then the beauty of this is that you get the interest, which are being paid several times a day, sometimes every hour. So you see like a tick that is moving, and you get the interest being paid almost instantaneously onto your wallet or onto your dashboard. But essentially, what Compound is doing is providing as a lending platform that provide people cryptocurrencies or digital assets to lend and to borrow, making money out of the spread. And on top, they give as a reward their native token, which is called Compound Token. So this means people that lend cryptocurrencies they earn 2 times. Number one, with the APY, 5, 6, 7, 8% a year, whatever the number is, and they receive a proportional amount of token depending on the amount of liquidity or the capital they have lent in the platform. That's the simplest. The third option, which is even more complicated, is you can use the capital that you're lending in the platform as a collateral to borrow money. Mm-hmm. And you can have a leverage up to 5x. So this is kind of, borderline, because it exposes, kind of the phenomenon which is called over-collateralized debts, that people lend money and borrow, up to we don't know which time, okay? So right now, obviously, we are at the very beginning, so I think it's too early to say how long it's going to be. We cannot tell. So we are at the beginning. We'll get better and better and more robust. They will come. But I think what is really innovative here is that with a very simple onboarding process, then you can lend capital and earn, very high APY for whatever asset they provide as an opportunity.
So, and it's kind of too early to know. So if it's 15 or 20%, that's for a month, but it's too early to know if that's going to continue for a full year.
It's not. Like realistically, it's not. So,
no.
I think the takeaway here for everybody on all of this is this. If we are in a market, what you should be taking away from this today is there is a rebuilding of business. First of all, there's this decentralized rebuilding of business, and in the financial markets, it's happening first, which is not unusual historically either. The second thing that's happening is that things like equities, bank savings, bonds, mortgages, borrowings, various types of financial instruments like factoring of accounts receivable, things like that have been going on literally for centuries. In fact, Daniele and I talk about a show on Netflix. I love watching it. It's called Medici. Yeah. And you're from Florence, so you really enjoy it. But it's all about banking. It's about when banking first started and the guys who really figured this out back then. And I think we're in that era again, only with technology and with the idea that these architectures of financial instruments and technology are marrying. Technology and money are coming together in a transparent way. They've been together for a long time, but they're now becoming much more transparent. So the takeaway of this is look at where your idea is and what you're trying to accomplish. What are you trying to accomplish here? Are you trying to accomplish trading, day trading? It's a high risk game. It's very complicated. It's a full-time job, and it's possible, but there's a lot to filter through. And not only is there a lot to filter through in the finance side, you better know something about technology too, right, Daniele?
Absolutely. So, and here you have what I was saying before. You want to learn, new technologies, the new inventions like, the automated market making protocol. There is a huge, bibliography. You want to study, you want to understand the lectures which are in the back. You cannot be an expert into anything unless you want to. Your goal in life is become an expert of anything, which probably you will fail because you cannot. But let's say like this: once you play, in this case, in a field where there's money plus technology, to me, it's much more important to define which role you want to play, beside how and what. So, because I give you an example, I have some friends buying and selling digital assets based on gut, which is probably 95% of the money that comes in to the benefit of just a few people.
Right.
So if you just analyze who has made money into the Bitcoin all-time high in 2017, at which point in time retail people bought Bitcoin when Bitcoin was high, and at which point most of these guys have sold Bitcoin, they sold at $3,500. So this means playing with digital assets, playing with digital money, it involves also kind of a state of mind. There's a lot of emotions, and most of the people will fail. So to me, it's much more important, rather than deciding which technology, in which token, eventually you want to start having an understanding and putting some money, is much more what do you want to accomplish?
What do you want to accomplish? Exactly.
So which is even more. Do you want to become a billionaire? Well, it's kind of difficult. Okay.
Yeah.
I kind of.
So if that's your goal. But
the amazing thing, though, Daniele, is you can wade into the water with, you don't have to put everything that you own into it. You can wade into the water with a small amount.
Give an example. again, not financial advice. The example always given to friends of mine is, let's say you like Bitcoin. You like Bitcoin because you decide it's a great asset to invest on. Then the best strategy is not, I have, $1,000, I buy 10,000 Bitcoin now, okay? But it's rather than I put $10 a day, a week, so the so-called dollar cost average.
Right.
So, because once you play in kind of very volatile market, the best way is to play in a long run, and the longest is always the better, with a very small amount that you put every single period of time. Could be 1 year, could be 1 day, could be 1 week.
But I'll go back to first understand what you're trying to accomplish. Are you looking at fundamentals? Are you looking at just the market? The markets, I think our message, our summary message is the market's here to stay. DeFi is not going away. Tokens aren't going away. Blockchain is not going away. It's a fundamental shift in the economic structure of everything. It's a fundamental shift that we're seeing. So it's very, very fundamental. Now, which one is going to be the Amazon? Which one's going to be the next Google? Which one's going to be the next JP Morgan? Who knows? Who knows? All of those companies, all of those started somewhere at some point in time. All right. Yeah. The point being, where logically are you? Logically, there's going to be a decision that you need to make within yourself. And then what's your tolerance from doing that? What's your tolerance if you're a business owner for taking and creating a digital transformation? I don't think that's an option. Personally, I think there is no option there. If you don't have a tolerance for that, get out of business.
Then you'll fail.
Yeah, business is digital now.
I think it's also important to explain, why are we talking about DeFi? Why we at Blocksters at Fusion, we're talking, repeatedly about DeFi. And also, what is the link between DeFi and us at the end of the day? First of all, we all love DeFi. That's step number one. At least I love DeFi. It's a great landscape of opportunities. And what we do see as an opportunity into the DeFi space is to launch our token into a very decentralized fashion, so as to provide transparency, to provide opportunities to people that are willing to step into it and see what's going on in the space. So it's much more for us an enabler of growth for us, but it also provides an opportunity for people to step into the space and start learning, educating, and making advancements into the understanding and into whatever targets they decide to set. Exactly.
And so let's go ahead and move on from that and say, if we haven't confused you enough,
we're gonna
already, there is more. Yes, there is more. And we're too far behind. There's too much of this to discuss in one webinar. So next week, we are going to discuss some other really big evolutions, NFTs and SPACs. So again, always looking at this fusion between DeFi and these new markets and the markets of what's happening in the world. So let's talk about crazy. Let's talk about what happened a couple days ago when this digital piece of art sold for $69.3 million at a Christie's auction. Let's think about the scope of that. This is digital artwork selling for almost $70 million at Christie's. Remember where that sign was being carried into? I don't know what the Lehman sign sold for, but at least I can touch it, right? So crazy. Let's talk about the evolution of this. And there are fundamentals. I'm going to just leave you with this cliffhanger. I'm going to give you some real fundamentals of why this actually makes some sense. Okay. And we're going to do that next week. But if you think 69 million's a bunch, then what about 500 million that these guys, these couple of fellas, are about ready to launch in the form of what are called SPACs, or special purpose acquisition companies? Effectively, And if you don't know who these two gentlemen are, that's Michael Dell on the left and Richard Branson on the right, and several others are releasing in now the traditional finance space something that's almost 10 times as much as that NFT we just saw. And it's a representation of basically, give me $500 million and I'm going to figure out something really good to do with it. Because that's what a SPAC is. It's effectively in the days that these started coming out, and SPACs have been around for a long time. They were called blank check vehicles. So this is a blank check vehicle, and this is happening in traditional finance. So the evolution isn't just in DeFi. The evolution is global. The evolution is across every aspect of economics and every aspect of business. And at BCERT, we started out with a mission that we might call impossible to create and deliver a decentralized business cloud. Because what we believed was, and still believe today, is that these things are going to move fast. Companies are going to need, and people are going to need to be able to be engaged in a way that they've never been engaged before. It's got to be inclusive technology. It's got to be decentralized. It's got to give control to where control belongs. That's a lot about why Daniele says he loves DeFi, because it puts control where control is transparent and actually belongs. And then you have a more level playing field. Would that be fair to say, Daniele?
Absolutely. I'll give you an example, very practical example. So my laptop has crashed, okay? So
what kind of laptop was it? I'm just curious.
Unfortunately,
yeah.
So my Apple,
my Windows machine's working great.
And obviously, I use
Dell would laugh there too. From your
exactly.
And I use a wallet, okay, where I have some tokens. You know, it's a piece of software. It's like an extension of the browser. So my laptop has crashed, but some of the money was in this wallet, okay, linked to this. And then when they ask me, do the backup, obviously once you do the backup, what are you doing? You back up your files. How can you back up an extension of your browser?
Right.
Especially if it's not Chrome, if it's Brave, as in my case, okay? So what happened is that actually, you know, it went to the technical assistance, and then I realized that probably they will format my hard disk. I back up everything beside my wallet. And I say, wow, there's money there, substantial amount of money. So how can I do that? Then I reconfigured the same wallet to Brave browser on my iMac, still an Apple, which didn't crash, by the way. And then with, you know, a recovery procedure, you know, all my tokens are there completely seamlessly. And this is not in the cloud. It's, you know, we are in a cyberspace here. It's a different place. What I wanted to tell here is that once you start understanding that you can play with your money, because we're talking about money, and in a very decentralized and seamless manner, it gives you a good vibe, at least for me. And you feel kind of free that you can play with one of your key assets with freedom. I'm not saying I'm not become billionaire because of this, but I'm just saying that you feel that you have an opportunity right now to play with something that matters.
Control. You feel like you have some control.
You didn't have it before. You didn't have
it. And it also takes it out of the hands of the 1%ers and puts it into the hands of the masses, which makes this truly exciting of where this can go too.
Absolutely.
And I want to leverage on that concept just a minute, because that's what we're talking about when we say decentralized business.
Correct.
Right?
Yeah.
If you're locked away from your business data, whether it's by the ransomware hackers or it's by the SaaS companies that control your digital assets and your data and your software, you're locked out, right? And if they decide to format your hard drive, you're done. You're out of business.
Yeah.
So a big part of this is bridging the delivery of the decentralized business cloud with Fusion, bridging that traditional to technical and DeFi marketplace, traditional finance and DeFi. And that's what we hope we've shown you today. And with your business, this entrepreneur DeFi market of creating new business models with these agile tools and tools that actually give you that sense of control, that actual control, so that no matter what, you're never left hanging and literally out of business. Those are the fundamental takeaways here. It all exists. It has existed for a very long time, and we've been working very hard on this mission to create all of these tools in a place where people can access at whatever level they wish to. That's the idea. Decentralized decision making is up to all of you. It's not up to us. We have to work very hard to provide that kind of a platform.
But the token that we're gonna release on DeFi will be at the center of these interactions of the ecosystems that we're building. Obviously, we are not revealing everything here, especially on Fusion Funder, because Fusion Funder, we just shown the first cut of the platform. We didn't explain in detail how the model is going to evolve over time, and we are not doing right now. But I just wanted to mention here is that a DeFi token will play an essential role there, because a token will create inclusion and engagement. And it's not like a token that I'm buying and sell and making a profit out of it. Well, someone can do it, but most of the time you don't make a profit if you're not a professional. Over the short term, probably you're likely to lose. While if a token has an intrinsic value, because it builds value over time and encourage people to do something, which is, it's very important that the token brings a participation. That's the value that we're gonna share with the participants into our ecosystem, and eventually it will be rewarded, and we will show how.
That's right.
Exciting over the next number of weeks here. And Tim, I know we want to talk more about that, what you just said there, NFTs, et cetera. We've got to wrap up here pretty soon. So
I want to share my favorite quote then today of what I really believe is most important takeaway is the only thing predictable about life is its unpredictability. And really what we wanted to provide to you is this foundational understanding as we proceed from here in our world from here. We're going to get deeper and deeper into the details of how this all works, how we are participating at BCERT here. If you like our content, click the button with a thumbs up and shout out, ask questions, subscribe. We're doing this every week, 9:30 on Fridays. It's super exciting for us to bring this information, ask questions. That's a lot of how we come up with what ideas to talk about. High level, drill down, all that kind of stuff is all part of our future events. We'd love to share more, but we're already over time. So with that, I'm going to say, I hope everybody is still staying safe and getting out there to get your vaccines and things like that, getting healthy and staying healthy. And definitely digital is where it's at. So stay digital.
Great. Thanks, everybody. And we'll see you next week when we talk about NFTs and dive deep into that space. So thanks again.
Have a great weekend.